Hello, Oak Bloke here, and this is part two. My internet connection decided to play funny buggers with me, so I've just disconnected, reconnected. So apologies that this is going to be over two different videos, but I don't know, maybe it doesn't matter too much. But yeah, I was just talking about the UK economy, and I was talking about the works and anyway, talking a little bit around charts, but yeah, quite a few. I suppose good news elements here. The public sector borrowing requirement, well, that actually went into surplus by 30 billion. So that would be perhaps like a white hole rather than a black hole. You know, it's essentially uh, obviously January is normally a surplus month, but this was the largest surplus. Um, I think ever, or maybe the largest January. Anyway, it was a good amount of surplus, which is good to see. Bad to see because obviously that's taxpayers' money, but good to see that this sort of black hole thing is not sort of getting worse and worse, which is obviously a positive. Manufactured goods up 2.5% year on year. Now that was down, but it's still positive. CPI only 3%, down from 3.4. Core inflation 3.1. I think that was down from 3.2. Wage growth 4.2 and decelerating. Now it was interesting because yes, this again, this is not a political comment or commentary. No interest in that, but it was interesting to see that whilst unemployment has grown to 5.2%, that in the same breath there were actually 52,000 more employed people. So 34.244 million in employment, which again is a record high. So I guess the unemployment percentage could be related to just the levels of immigration, because obviously 52,000 more employed people in the month of January was positive. So yeah, I mean the gist of it is that if you've got exposure to, I suppose, UK retail or UK consumer. I think it's just my opinion. You make your own investment decisions, but I think 2026 is going to be a good year, maybe even a great year. I mean, maybe that we'll see economic growth of close on 2%. I'd kind of in my mind sort of thought 1.8, but maybe it'll be stronger. So um, ideas like regional REIT, like Robert Walters, things that I've spoken about where I'm sort of saying these are on the cusp of the turning of the tide. And I don't pretend that I've got any kind of special insight or magical insight. I don't, but it feels like now is that about that time. And look, maybe some of these things take some time to evidence themselves, but I kind of was seeing some green shoots of growth of evidence in the RWA results and also in the RGL. I mean, yes, they've cut their dividend and the share price dropped to, I think it was 98p. I bought some more because I thought, well, sub £1, that's just cheap as chips. And of course, it ended at £1.03, but £1.03, it remains incredibly cheap when the amount of office space, the amount of new build office space is pretty much sort of negligible to, I don't think it is quite literally zero, but it's close to zero. And yeah, there's office space getting repurposed into flats and accommodation and other uses, yeah, I think the need for good office space is not going away. Collaboration spaces and all the rest of it. But yeah, the fact that RGL are repurposing more into reinvesting and tarting up, as I put it in the article, I think will be entirely positive. Sorry, I'm sort of talking about the stuff that I've sort of written about here, but also challenger banking ideas. Now, obviously, the banks have done very, very well. If you go and look at NatWest and Lloyd's, and they're all sort of up double 100% in 2025, something like that. or maybe not 100, but you know, certainly well into the double digits in 2025. I think that you know, this one with Revolut, this one with Starling. In fact, I'll talk about that in a second. But I've also written recently about these guys with their Zopa and there's two others, Zopa, Tide, and X. No, not XYB. Oh yeah, they do have XYB, but that's not a bank. I'm thinking of their lending, working capital. The name escapes me. And then these guys with Revolut as well. So yeah, there's I think I think when you kind of go back and like, well, what was the reason for RGL dropping in price? Well, it was because they were close to breaching their covenants, because their covenants were 70% of loan to value. But you know, they announced in their update that the loan to value is now below 40%. And they're planning to do about 50 million of realizations in 2026. Bearing in mind that they were able to realize them at above book value, and this is trading at like 50% to that book value. I mean, it's kind of a no-brainer, really. And obviously, you know, the stuff they're getting rid of is the stuff that is the sort of less you know, less occupied and less attractive. You know, it's stuff that they've sort of earmarked for disposal. So it's not like they're selling off the crown jewels and they're left with the rubbish. They're selling off the rubbish and getting above book value, not much above book value. And obviously, by the time you factor in costs, maybe it'll be slightly below book value. But it's and the other I think the other ratio that I would particularly point out was now this is the estimated rental value, the ERV. And actually, if you look at the ERV value relative to the relative to the share price, I mean, you're getting so basically it grew from 13.36 to 13.86 during 2025. So the ERV is up. And then, you know, when you consider that new lettings are kind of happening at about 3.9% above ERV, I mean, that's sort of getting you more towards like a 14.4% estimated rental value. So what this means is if you rent out 100% of your offices, that's how much you're going to make. But that how much you're going to make is before any kind of capital increases. In other words, if you sort of say, well, on top of that, you know, I reckon, you know, the long term increase to property is about 5%. It's inflation and a couple of percent. You know, land, they're not making it anymore, was I think Mark Twain, if memory serves. So yeah, you know, that there's yeah, I think there's sort of lots of reasons to feel positive about that. Also, sort of quick mention to Chief Rebel, Cockney Rebel, that talked about Seraphim Space Tech in his weekly article. I looked at that back last year in this article when it was 50p. It's now at £1.50, but the NAV is growing very strong. I kind of get his thinking here, and you know, sadly for me, I sort of took profits and got rid of it, and kind of wish I hadn't now. But you know, hey ho, you know, you can't win. Well, you can win them all, because I made 80%, and I thought that was fantastic. But yeah, I suppose I should have hung on and got 200%. So there we go. That's no, it's still at a discount. I mean, because the NAV increased by so much, it's at a 7% discount. So yeah, I do think it's got. I certainly see that it could go higher and go further. I actually would just call out a couple of alternate ideas, or just other ways to play that theme. I agree with the theme and I agree with the idea. Now, these are not 100%. I totally get the, you know, SSIT is 100% space tech. So if you believe space tech is going to do well, then yeah, go for it. But if you just sort of said, well, I would like to have like a bit of exposure, but I'm not you know, I like to have exposure to those banks you were telling me about as well. Well, guess what? You know, Molten Ventures is a way to do that because you've obviously got large Revolut exposure, but these guys have got 104 million of space tech in their portfolio, which is this one, which is a transportation. But I think this has got legs, not literally, but uh, uh, because this is a European company that offers transportation. I think transportation is pretty key, and I think the over reliance onto SpaceX or similar, is, I think there's certainly room for a second player, and these guys do low level, low altitude, so it's not sort of space. It's kind of upper atmosphere space, I guess you could say. Do they do like recycling? Do they have a grabber that grabs the space rocket? No, I don't think so. But could they be a beneficiary of stuff going into space? And would the Europeans want to kind of not use SpaceX because of everything that's going on? Quite possibly. So I think ISAR could do well. ICI, Cockney Rebel covered that, and I've covered it in a prior article as well. In fact, that April article covers it, and some previous Molten Ventures articles covers it. So yeah, didn't surprise me whatsoever that it increased by 32 million to 73 million in 2025. And then there's a third one, which is a little token early stage 1.2 million. So that's what that is made up of in terms of space tech. But I also would call out some other alternates, which are kind of hidden away space tech in bombed out companies with bombed out market valuations that kind of reflect nothing of their potential. This is Frontier IP, ticker FIPP. FIPP holds a large holding of Pulsive, and Pulsive, I believe, would have a lot of application into space tech because of its energy efficiency, and obviously, stuff that you send up there is power hungry. Yes, you're going to have satellites with solar panels on them and stuff like that, but having something that is energy efficient, and the cost of sending stuff up, obviously, yes, it's a lot less than it used to be. It's I think it's $1,000 a kilogram, whereas it used to be many times more expensive. But nevertheless, it's still, once you send it up there, you're very reliant upon it having longevity, and having energy efficiency is just one of those ways that you can future proof what you're sending. So I think Pulsive could do very well. And Cam Graphic, again, it's a bit of a wild idea, but because what they do is graphene photonics, which basically is that rather than using radio waves, that you use lasers to communicate. So satellite to satellite comms will be a big thing, and obviously satellite to Earth or to ground as well. But graphene photonics, I think, is one of these key technologies. And Cam Graphic, I wrote an article about it last year, and there was a large funding round. FIPP is, I think, about 15% owner of it, but there was NATO was one of the other investors. Yeah, there was I forget the exact list, but yeah, certainly worth reading that article if you're interested. EMV Capital as well is another where, and again, Filtronic has had a lot of, has gone up a lot, and it has had a lot of coverage. But if you're looking for sort of things that are the next Filtronic, that are kind of, I kind of say here that Filtronic is the muscles of satellite comms, whereas other satellite antenna players are building the brain, the skeleton. They're sort of complementary to Filtronic, but why would they not do well similarly to Filtronic? It's not as though they're sort of competitive particularly. This one, Oxford Space Systems, is this idea of like you send up a folded dish, and then it kind of has a technology that that does the James Bond thing, like out into space. And then Sofant is satellite direct to device, smart antennae. New Quantum is those guys were actually on Bloomberg the other day being interviewed, so I thought that was interesting. But yeah, quantum secure comms and quantum cryptography. I, I mean, absolutely essential for satellites and for anything around military. Another of the holdings, and then all focal. As well. So yeah, just some alternate ideas with the space theme in mind. And you can buy those at 50-60% discount to their NAV. Whereas, I mean, I haven't looked at Filtronic, but I don't expect you'll keep getting that at a 50 to 60% discount. Far from it. Anyway, Chrysalis, I kind of would call out that that's dropped in price now to 94p. I would certainly sort of call that out as extremely good value. And the reason I say that, the NAV, most recent NAV was £1.65, and that I think was down a little way, and it's down post period because of Klarna, but more on that in a second. Basically, if you sort of say, well, what's the market cap? Market cap's 459 million. Strip out the cash that it has, strip out the debt that it owes, strip out the listed stuff. So listed stuff is Klarna at its bombed out price. Wise, I think that's it in terms of listed. Anyway, you get down to a net 387 million, and Starline is valued at 436 million, or its portion of Starline that it holds is valued at that. So essentially, you're getting like this at an 11% discount to Starline, and that's just Starline. More on that in a second. 11% discount, and Starline's valuation grew by 36% in 2025 to December. Looking at Starline's latest accounts, which to be fair are up to March 2025, so are not up to date. Excuse me. This company delivered a net interest margin of 4.12. NatWest, Lloyds, etc., average about 2.8, maybe 3. Some of them were 3% net interest margin. Cost to serve £42 per customer. The average for the big banks is about £160 per customer, and then about 250 for sort of Handelsbanken and the premium banks. So hugely cheaper. Well, why is it cheaper? you know why has it got this advantage? Well, it puts it down to its engine platform that that automates 80% of activity. Okay, well, is there any other evidence to that? Yes. Engine's customer salt reports below €50 cost to serve, so pretty much the same thing. Engine customer AMP Bank in Australia reckons that they're going to get a 50%. Now that one's earlier stage, so that's. But yeah, some really fantastic. This is one of the return on tangible equity of 17.9%. Again, well above the big four. I think big four were 13-14% return on tangible equity. So and the year before it was 31.5. Some of that reduction from last year was down to a fine. So I think they got caught out with a £29 million fine and so on. The progress with their customer AMP Bank is that's kind of gives you a little bit of a picture. In the first sort of year that they've kind of raised, or they've generated 300 million of deposits and so on, and more than 8 out of 10 customer satisfaction score, and so on. So but that's just Starling. So you're buying Starling at a discount, and then you kind of go, well, hang on a minute, like we're also getting like a free ride, 290 million of stuff. Fox, Smart Pension, Brand Tech, Deep Instinct, Secret Escapes are all in the price for free. Now, these have pretty much all gone down in December. This is the year-on-year comparison, and this is the post period. So Klarna has lost 49 million post period. But essentially, like, yes, they've reduced, but they're in the price for free. Secret Escapes, in the latest newsletter update, I think they said that they're now profitable, which is great. That, not surprised, because I think holidays are again a growth category, as far as that goes. And of course, the other reason for the drop in price was that they've fallen out with their investment manager, and that they've given them notice. But as far as I can see, like, great, because Chrysalis are going to realize and wind up, is, I think, the intention now. That's great. I don't mind that. Like, I can see that, in my opinion, that they're going to fetch at least 94p. Like, it would shock me to end up at a loss on this one. I might. I mean, I'm not. You make your own investment decisions, but it seems to me that these companies are going to. I know. I also think Klarna is going to do. I mean, when you actually look at Klarna's results, that, yes, it's down sharply, but some of that is the SaaS apocalypse. Again, it's sort of, like those earlier ones, down 66%. There's sort of the SaaS apocalypse has hit the US particularly hard. Um, but the latest results from Klarna were that revenue was up, and I think profits were down, but revenue was up, and it was making good progress. And bear in mind that this is an early adopter of of AI. I mean, they've used agentic AI well ahead of pretty much every competitor to automate large parts of their customer service. I think they said they'd avoided employing 700 people because they basically just automated the customer service. So anyway, that I think and I sort of make the point about there not being, I don't think, great coverage of Chrysalis. I think it's still has a bit of a hangover from there was a bit of a sort of bad taste in some readers' mouths about it because of the large winnings that I think they took. Then the share price dropped. Obviously, that's quite a few years ago now. So. But yeah, I've always sort of been quite pragmatic and sort of looked at the assets, and that's and I was buying it at 50 something p, 50. I think it was in fact, I think it went down into the 40s at one point. So I'm sort of sat on a large gain really with Chrysalis. And the guy that they've brought in from Allied, that's sort of been helping with the wind up of Allied Mines, and before that, Urban Exposure. I mean, I made money on Urban Exposure. I didn't get involved with Allied Mines. I didn't like I was quite skeptical about Allied Mines, but I sort of say it there. It delisted itself. Obviously, if before it delisted, you sort of would have lost a lot of money. Let's put it that way. But at the price it delisted at, 30 million, which obviously was very, very pessimistic, I guess you could say. The guys managed to sort of bring it back and get 80 million for the 100 million. And I think it, as I say, I'm not sort of very closely looking at Allied Mines, but yeah, my understanding is that he's done a good job there, and he did a good job for me with Urban Exposure all those years ago. So yeah, bring it on as far as I'm concerned. See you later, CIP. Yeah. Yeah. So anyway, and just the fact that there's not very good news updates like this, to me, is massive news. So Starlene's engine part of their business, the engine part, sorry, I haven't explained this, but the engine part is the software, the banking software. So we will basically sort of give you a banking software out of the box. You can lend money through it. You can do bank ledger. You can do sort of credit cards. You basically, they've just got modules for everything. So all the banking products that a bank would ever want to sell and provide, they can do that through Engine. So Engine have signed with Canada. I mean, it's a big. Well, you can sort of see it here. It's one of the big five of Canada. So it has assets of 1.4 trillion, and I don't know if that's Canadian but like it's a large bank, so that is a great endorsement of the software. The two previous customers, because this is the third customer, two previous customers, one was actually a large customer, but in Romania, and it was like a startup business that this large, I forget the name of the bank, but it was, when I looked at it, I thought, oh, actually, it's not some little pokey, it is actually a large. And again, the one in Australia, large bank, but they were doing a little startup business that so far has been successful, as you saw earlier on. But this is a much bigger, the third deal's a much bigger one as far as I can see. So, yeah, and this as well, the fact that Salt has grown, so Salt being the first customer, the Romanian one, that I think earlier, some months ago, they'd reported, that they'd hit 500,000, but more recently, I mean, that's sort of 2 months ago, that they'd hit 700,000 customers and 2 billion Romanian currency, lei, I think that's pronounced. Yeah, great, really good to see. Like why is it possible to buy that at an 11% discount and then get all those other bits for free? It's bonkers, absolutely bonkers. Anyway, if you're enjoying this, there is this option here to click on there, and you can use share scope that I've been using today. You can get a discount. Basically, you just quote Oak Bloke in the discount code, and then you get I think it's 20% discount, maybe. It's quite a bit anyway. It sort of brings it down by quite a bit, and then what they'll do is they'll donate 15% of your subscription to Aspire, and if I can get 25 or more of you to use this link, and they'll up that to 20%, which is fantastic. So just call that out, and I'm enjoying using share scope, yeah, certainly recommend it to you. I'm going to be joining Paul Hill, Mr. Hill, on Vox Markets week Monday. So do come along and ask questions, and yeah, it's going to be Paul Jordan from Amati this coming Monday, so I'm the Monday after. I won't be bringing any musical instruments, I say there, and I'm going to be announcing a couple of new ideas. I'm not going to give you any clues today, sorry, actually I am going to give you some clues, but yeah, so number one is going to be the ultimate Ed Millie play. UK Energy has some critical constraints, and this is an idea that will take advantage of that. And then the other one is a SaaSpocalypse play, credible growth, trades at a bargain price. So do join to hear about details of those, and there'll be a couple of others that sort of ideas that I'll be covering, which are covered already in articles, basically. But just moving quickly to oil. So oil now at 71.76. So the surplus myth, and some of that is being blamed on. Oh well, there could be conflict with Iran, and the Straits of Hormuz could close. I'm sorry, but 71.76 is not because of Iran. If that happens, and if the Straits of Hormuz close, oil will be well above 100, well above 100. So don't tell me that this price here is based upon Iran. I don't think that's the case at all. Or at least that doesn't reflect that risk at all. I think it was interesting to see that US crude inventories fell by 9 million barrels. So it was below average before. It's now fallen further. So this myth of surplus, again, more evidence coming through that's not quite how it is. I would also just particularly call out Ithaca. And just, I mean, that is now above £2 a share, so it's well above the sort of reduced target price that I think was given by the Goldman people. And look, UK gas is at 78p a therm, and that's 30% lower than it was a year ago. But I would also point out that natural gas inventories, stock levels are at below 30%, which, when you look at the 10-year average, the 10-year average is sort of should at this time of year, mid-February, should be at about 55-60% full, and they're not. They're at below 30% full. The last time it was below 30%, unfortunate coincidence, was just before the Ukraine invasion. And what happened next after Ukraine? Well, UK gas prices shot up 500% to £6.30 a therm. Now, I'm not saying it can and will happen, but if there is, something happening with Iran, it seems to me that Ithaca will benefit and Serica, SQZ will benefit. So yeah, I guess it's one to think about, that it could be like other things will probably drop, maybe temporarily, as happened after the Ukraine invasion. But I also think that we've also seen a year ago that there was this very what's the word, very choreographed attack on Iran, and a very choreographed retaliation by Iran on a US military base somewhere in the Middle East. Might have been Saudi Arabia, might have been. But basically, this base was evacuated, so there was no people in it. And then the Iranians shot a missile and put on their television, "Oh, look at us attacking the Americans." Um, I mean, in my opinion, completely choreographed. That was planned, and let's create something for the television and for the baying crowds. But like, is there going to be some conflict, or is there going to be another choreographed incident? I don't have any special knowledge, but I just sort of would call out again. The recent history would suggest that maybe something will happen and there'll be a reaction, but it won't be um, as kinetic as maybe it might appear to be. I don't know though. But yeah, just sort of offer some thoughts. There's going to be some results this week. Unite are going to be delivering results. I'm kind of anticipating that that's going to be really good, strong, solid. Ovation as well, announcing results this week. Interestingly, Ovation have been promoted up to the FTSE 250. I hadn't even realised, and it's very recent. I mean, it's 2 weeks ago. But I don't think the indexing has, all the ETFs and the sort of passive funds that obviously will now be buying Ovation. Again, I don't think that has happened yet. But I would also call out the fact that Ovation have bought back 6.4 million shares, which is about 10% of their shares over the past few months, and also refinanced their debt. I would also call out, and again, these are in previous articles, but the fleet. They kind of answered an analyst question to say that their current valuation of the fleet that they own, is $82 million higher than the book value of that fleet, because of current prices going up. If that's true, that puts the current £1.40 at a 64.7% discount to NAV, or otherwise, if that 82 million is garbage and they wouldn't be able to sell them at an $82 million higher. Not that I'm saying they would sell them, but I'm just saying, the fair value of these aircraft for their age and condition, etc., is potentially much higher than what the book value is. Now, will that get revalued in the accounts, in the interim accounts? Probably not, potentially not. But when they come to sell these aircraft, if they sell those aircraft, obviously they'll be making gains on disposal. So, again, it's I think if the evidence is there, and obviously the past evidence is there, because they did make a gain on disposal from the last two aircraft that they sold, and also the aircraft where they've got these purchase rights that they made a profit on those as well, above the value of that in the balance sheet. So they kind of put an expected profit on the balance sheet as an asset. But they actually made a higher profit than that, so they were actually able to book a further gain. So yeah, I would just sort of call out that was 70 million. It's now 62 million. So the buybacks, or sorry, yeah, 6.4 million. So it was what 68.7, I guess. Yeah, I just think as well, when you look at the build out of aviation, just the number of airports being built in India, for example, that aviation are sort of one of these that are going to do very well out of that, and are well positioned. Yeah, enormous macros with benefits. DEC will also be reporting, so we'll see there. I've just put in a couple of photos of past articles as a reminiscence. So Macango I've included that because it was the top performer in 2025. And still has further to go. It's up 7% this year, and I thought that was interesting, even though it's the case that it went up by a whole load last year. It's gone up this year. So uh, Thor exploration up 21% this year, even though it went up 298% last year. And again, reasons why I think it's got further to go. And nobody is really thinking about the lithium aspect of Thor. Minerals and financials up 22% this year. Again, it was up hugely last year. I included it. Um, and just sort of make a point about I've averaged up with that one. So it's wonderful when you sit there sort of looking at your oh yes, I'm up 400% on this share, and you don't want to lose that high percentage, but actually when there's a drop back of price because the gold and silver prices are oscillating, as long as you're happy that you think, well, gold is not going to kind of continue dropping, and I'm going to buy back in on the I'm going to sort of buy back in on the decreased price in anticipation. So at that point, you lose some of your percentage. Your average goes up because you're buying back at a higher price. But the point is that psychologically that's hard to do, but you should do that if you believe it's going to go higher, because it's not about the percentage, it's about the pounds and the pence. And I just make that point. It was something that I sort of had to struggle with a bit, but then I thought, well, this is mental that you're sort of looking at it as like, oh yeah, I want to retain the wonderful percentage. No, it's not about that, it's about the pounds and the pence. I include the PRTC, and I'm going to write an article about that soon. But I sort of include this picture because it took a lot of goes to get it to draw what I wanted it to draw. It wasn't easy to describe and to achieve that. I call out this picture because they've changed their name, and I sort of ask the question: did they change their name because of Oak Bloke coverage and Begbie's trainer? I don't know. It's just a bit of fun. No reminiscence would be complete without a fun run picture. So there's one there. I think Triton, squeeze it through your Triton, which obviously was very topical last year. Is again, it was a bit of fun, but I think quite a few people found that the funniest picture. Best title, I offer nothing but blood, tears, and gore for Gore Street energy storage, and I sort of make the point about I included the picture of Churchill there again in a bit of fun, but I'm not the only one doing it, and this sort of loops back to the bit at the start of the article about generating AI, bringing the Oak Bloke logo to life. Well, this is another sort of example of that. In this case, it's Thatcher, and it's obviously a very political video, but I mean, it's very clever, the sorts of things that are happening and are being done. I sort of call it the rebirth of spitting image for the 21st century. So yeah, that video is part of this article as well. Two more reminiscence. I guess I thought this picture sort of always makes me think of Ronald Reagan. This actually, so long partner. I sort of included this because of the it sort of was on the Emmaus campaign donation page. So brings back some positive memories. So I included it for that reason. And this one is my first article picture, so I've included it because I thought it deserved a mention in this reminiscence. That's where it all began, and there was no clever pictures. There was no clever strapline. The article was called Cadence Minerals. Yeah, I sort of just thought I'd include it there. I'm going to speed up because I'm conscious of time. Bearish ideas. I sort of was very bearish about WeCap. I was very bearish about Mars. Both are sort of down, half down by half in 2026 so far. Yeah, I think just this Anglo-Asian, sort of make some comment about that, and I'm going to do a video with I don't know if it's a lady or a gentleman called Juliet Bravo, maybe a lady, I don't know. Anyway, I'm going to do a video once the 2025 results are out in April, and they released their 2026 guidance. So do I now feel I should invest in Anglo-Asian? And the difficulty is that obviously it's increased its production, and it's got a lot of uh, potential growth of copper production. So on the face of it, you sort of think, oh yeah, and it has gone up a lot. I mean, look, I was very negative about it by about here, and it's doubled since. So obviously I made the wrong choice, didn't I? I sort of missed out on gains. I mean, obviously I could argue, well, no, I invested in Thor and I made far more than somebody would have made on this only increased by 158 and Thor increased by 300%. So I guess you could sort of make that counter argument maybe. But anyway, I sort of looked at the guidance. I sort of said, well, based upon 3-to-1 copper and 50-to-1 silver to gold, they're now guiding for between 91,000 and 112,000 ounces in 2026. So 91 would be a 20% drop from their prior guidance of 110. And this is the reason that I've been quite negative about Anglo-Asian. And I know I've upset some people by being negative, but hey ho, like everyone's entitled to their opinion. And I've just made it evidence based. I mean, like they do release these sort of slippages, and even their 2025 they they didn't achieve all that they intended to achieve. They achieved some of it. Um, and yeah, I think the all-in sustaining the ASIC cost again, they gave some guidance, which when you actually run the numbers, well, that translates to an ASIC. If you sort of take 2/3 copper, 1/3 gold, and you take their numbers, you end up at 2240 best case at the upper end of guidance, or 2,565 at the lower end of guidance. I mean, that's very expensive gold and gold equivalent ounces that you're producing. Like, that's not attractive. And then you sort of realize that like the government of Azerbaijan and the taxes and the various things are then taking a slice off the revenue. So the revenue they got in 4Q25 was 2,800. I mean, like, you're barely making any money. I mean, obviously that to that, and you're making about 600 an ounce. But anyway, I sort of, again, if you run the numbers and say, they'll make between 90 and 110,000. So even if they achieve their guidance, and I'm assuming static prices, so like 5,000 gold and 13,000 copper, like as the average for 2026. I don't know that. I mean, it could go higher. Of course, it could. But let's say that's the average. I mean, you're looking at something like a 23 to 65, again, upper and lower. where that translates to like the price earnings of 7 times to 20 times. I mean, that to me is not attractive. When I've sort of run similar numbers for Thor and got to or metals exploration, and I'm getting like to a PE of 2 or 3 times. I mean, this is just more expensive. That's at least based upon the numbers, and I'm using actual numbers and their guidance. Like, I'm not even making the argument, oh well, maybe they won't hit guidance, or the lower end of their guidance, like they might fall below 90,000. I mean, they're at 80,000. They're doing a run rate of 80,000 ounces per year in Q4 25. So they've only got to increase that by about 12%. And there's talk of this stockpile of ore that and they're sort of doing some capex investment to increase their throughput. And so it all sounds like it's going to be at least at 90 and maybe maybe more. But yeah, just I just still arrive at numbers that just make it unattractive, and that's before 7 to 20. That's before there's any kind of political risk about Azerbaijan and things kicking off again with Armenia, and it's yeah, and hopefully that won't happen. And it's they're all sort of friends again and friends, but there is a long history of conflict between those two countries. So who knows? I mean, it just doesn't feel like it's one that I'm going to invest in. Is kind of where I ended up. Anyway, just to conclude, this video and this article, which will be released tomorrow, is a special article 800 Article 800. To summarize, I think the UK offers quite a lot of upside in 2026. Obviously, the movement out of SaaS apocalypse could be beneficial to the UK as well, because people are moving into sectors outside of SaaS sectors, maybe. But also just the economic data is one other reason for that. I still obviously commodities, and I'm very positive about many commodities. Positive about Japan. Amova is a 2026 idea, and Japanese smaller companies, Bailey Gifford Japanese smaller companies, is 2025 idea, and that's actually doing very well in 2026. That's up 12%. Amova is up more. Amova is up 16%, I think it is. And then also Turkey ETFs up 22%. Egypt via IDHC is up in 2026, and Africa via ASAI is up in 2026. Esoteric ideas, I admit, but it's evidence based. And my rationale was to not have all my eggs in a UK basket, as in UK focused, to have some outside of the UK. Although I have been kind of thinking, maybe I should sort of move more into the UK. But then I'm, like, maybe I should be looking at the US. As we all are, we sort of have these constant stream of decisions and opportunities and things to, and I think it's sort of, yeah, I think the lesson that I'm sort of settling in on is just relax, let it happen. And yeah, so far so good. And look forward to talking about the ideas in a week Monday. So if you like this video, do just like and share and subscribe. Thank you for watching, and hope that's been useful. Apologies that it was 2 videos, not 1, but yeah, just, I don't know, the internet. I've upgraded my internet recently, and it's 2 steps forward, 2 steps back, maybe. I don't know. But anyway, that's enough from me. Cheerio from the Oak Bloke. Cheerio for now. Cheerio.